There's a form sitting at your mortgage company right now that can permanently lower your monthly payment by several $100s. It costs about $250 to file. You keep your interest rate. You keep your original loan. And almost nobody at the bank is going to bring it up to you because they have zero incentive to. It's called a mortgage recast. And by the end of this video, you'll understand it well enough to know exactly whether it makes sense for you, and more importantly, whether you're about to make the single most common mistake homeowners make with a lump sum of cash. Let's build this with real numbers so you can watch the mechanics work instead of just taking my word for it. Say you took out a $400,000 mortgage, 30-year fixed, at 6.5%. Your monthly principal and interest payment lands right around $2,528. Now fast forward 5 years. You've made 60 payments on time, and your remaining balance has ground its way down to roughly $374,000. That payment still shows up every single month like clockwork, and lately it's starting to feel heavier than it used to. Then, something changes. Maybe you sold a property, and the proceeds are sitting in savings. Maybe an inheritance landed. Maybe a bonus finally hit. Whatever the source, you're suddenly holding a genuine lump sum, let's say $80,000. And your mortgage payment feels like the obvious place to put it to work. Here's what almost everyone does next. And here's exactly why it doesn't do what they think it does. You take that $80,000, send it to your mortgage company, mark it apply to principal, and it works exactly as described. Your balance drops from $374,000 down to $294,000. You just erased years off the loan in a single afternoon. It feels incredible. Then the next statement arrives. Your required monthly payment is still $2,528. The exact same number, down to the penny. You handed the bank $80,000, and your monthly bill did not move an inch. Here's why. An extra principal payment, no matter how large, does not lower your required payment. Not a small one. Not a massive one. Not ever. All it does is shorten the tail end of the loan. You'll finish paying it off years sooner, somewhere out in the future, but between right now and that future date, the bank still wants the exact same amount from you every single month. Your $80,000 is locked inside the walls of the loan, and your monthly budget is exactly as tight as it was the day before you sent the check. At this point, most people assume there's only one real fix available: a refinance. And yes, a refinance does reset your monthly payment. But before you go that route, you need to understand what it actually costs you to get there, because it's uglier than most people expect. Refinancing typically runs $6,000 to $10,000 in closing costs. That covers a new appraisal, new title work, an entirely new loan application, and usually several weeks of underwriting. But here's the part that should genuinely stop you. A refinance replaces your existing rate with today's rate. If you're currently sitting on an older, lower interest rate, the exact thing you swore you'd never give up a refinance hands it back to the bank in exchange for a lower payment. Paying thousands of dollars specifically to lose the rate you've been protecting isn't really a solution. It's a downgrade wearing a solution's clothing. So there has to be a third option, and there is. It's called a mortgage recast, and it's the tool almost nobody advertises to you, because it doesn't generate the fees a refinance does. Here's how it actually works. Same loan, same lender, same interest rate. For a flat fee, typically somewhere between $150 and $500, your servicer takes your new lower balance in our example, that $294,000, and simply respreads it across the years you have remaining on the original loan at the same rate you already locked in. They're not issuing a new loan. They're just rerunning the math on a smaller number. In our example, that new required payment comes out to roughly $1,988 a month. Let that number sit for a second. The payment fell from $2,528 down to under $2,000. That's about $540 back in your pocket every single month for the rest of the loan without touching your interest rate at all. Your lump sum finally shows up in your monthly bill for the price of a form that costs less than a nice dinner out. Now, not every loan qualifies for this. So let's go through the actual rules before you get excited and call your servicer. Rule 1. This is primarily a conventional loan feature. Loans backed by Fannie Mae or Freddie Mac, meaning most standard conventional mortgages, generally allow recasting. FA loans and VA loans generally do not. That single rule settles the question for a meaningful chunk of homeowners right out of the gate. So it's the first thing to check. Rule 2. There's typically a minimum lump sum required. Most servicers want to see at least $5,000 to $10,000 applied to principal before they'll run a recast. Our example of $80,000 clears that bar easily. But if you're only sitting on a couple $1,000s, this tool might not be available to you yet. Rule 3. And this one matters most. A recast does not change your interest rate. And it does not change your original payoff date. You're still on the exact same clock you started on. The only thing that changes is the required monthly payment, which drops because it's now being calculated against a smaller remaining balance. Let's put the two tools side by side, because once you see them next to each other, the comparison becomes almost unfair. A refinance runs $6,000 to $10,000 and permanently replaces your loan rate included with a brand new one. A recast runs roughly $250, keeps your existing loan and rate completely intact, and simply requires one phone call and one form. This is exactly why homeowners sitting on older, lower rates tend to love this option once they learn about it. It's the only tool that lowers your monthly payment without forcing you to give up the rate you're protecting. But here's where it gets genuinely interesting, the move that most people miss entirely, even after they've recast their loan. After the recast, your required payment drops to that lower number in our example, roughly $1,988. Nobody said that has to be the amount you actually send. So keep paying your old amount. Keep sending the same $2,528 you were already comfortable living with before any of this happened. Here's what that does. The bank's new required payment covers the loan, and the extra roughly $540 you're still sending goes straight toward principal every single month. Which means you keep the exact same payoff speed you had before you ever recast, the same finish line, nothing lost on the timeline. But now you've built in something you didn't have before. A safety floor. If life gets tight, a job loss, a medical bill, one genuinely rough year, you're allowed to drop back down to that lower required payment. No phone call needed, no permission required, no penalty applied. Remember, before you recast, the bank wanted the full $2,528 no matter how far ahead you'd gotten on payments historically. Now, in your worst month, the required bill is $540 cheaper, automatically, built into the loan itself. So really, you're looking at 3 doors here. Door 1, send the extra principal, skip the recast entirely. You get the fastest possible payoff, but zero relief on your actual monthly bill. Door 2, recast alone, and pay only the new lower amount. You get real, immediate relief, but the payoff date stays exactly where it originally was. Door 3, recast, and then keep paying your old higher amount anyway. You get the same fast payoff as Door 1, with an emergency escape hatch built directly into the loan in case you ever need it. Same money, same house, but one version of you has options that the other versions simply don't. Now, a few honest caveats, because this tool isn't a magic trick, and it isn't right for every single situation. If your loan is FA or VA backed, this door is generally closed to you. It's still worth asking your servicer directly, Just don't get your hopes up going in. If you don't actually have a genuine lump sum sitting available, there's nothing here to recast in the first place. And that's fine, this simply isn't your video yet. And please, do not drain your emergency fund to manufacture a lump sum for this purpose. That cushion outranks a lower mortgage payment every single day of the week, no exceptions. If you're carrying high-interest credit card debt, that lump sum almost always has a more urgent job to do first. Paying down your most expensive debt should generally come before optimizing your cheapest one. One more honest note worth sitting with. A recast lowers your required payment. It does not, by itself, make the loan cheaper overall. If you recast and then only ever pay the new minimum going forward, your smaller balance gets stretched back out across all the remaining years of the loan. And depending on the math, you can actually end up paying more total interest over the life of the loan than if you'd simply prepaid the principal and left your original payment amount untouched. This is exactly why the pro move matters so much. Recast for the safety floor. But keep paying the old amount for the speed and the long-term interest savings. It's the version of this strategy worth actually using. So here's the entire video compressed into one breath. Sending a lump sum straight to principal, by itself, does not touch your required monthly payment, no matter how large the check is. A refinance does lower your payment, but it costs thousands of dollars and takes your existing interest rate away from you permanently. A recast, for roughly $250, reruns the math on your new, smaller balance and hands you back real monthly relief without touching your rate at all. And the pro move stacks all of it together. Recast for the built-in safety floor, then keep paying your old amount anyway for the speed and the long-term savings. This is education, not personalized financial advice for your specific situation. Your loan, your servicer, and your exact numbers will determine whether this makes sense for you. So check your own paperwork carefully before you move any real money around. If you had no idea this option even existed, you're genuinely not alone, and that's exactly why more people need to see this before they hand their bank a huge check and wonder, months later, why their bill never actually moved.